And 72% of the time the market goes up. And the answer came to me. And that's when I developed my chart. The answer came to me is because, just like Caterpillar, when they pull their money out, you get out.
Whoa. It's your daily dose of how to manage your money. And now it's time for Phil's Day on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye. Good afternoon, and welcome to my podcast. A lot to talk about today. A lot of BS is being thrown around. So let's first talk about how are we back to this 1,000-point drop, and will the plunger team come in and save the day? And we just have to wait and see. Now, if you recall, earlier part of the week, we were down 1,000 points. Plunger team comes in, or 800 points. Plunger team comes in, cuts the loss to 400. Next day, we're down 1,200 points. Plunger team comes in, and we were only down, I think, that day at about 400 points, I think. From 1,200, we're only down 400. So the two big days, we went from 800 to, I think it was 75. And the big one from 1,200 points down to 400. That was dealt by the plunger team. They came in and fixed it, okay? And I'll talk about that in a moment. But first, let's talk what happened today. Everything seemed to be going good yesterday, right? Even tech stocks started to move a little bit yesterday. But it wasn't reality. The yields are setting to panic. You always follow the bond market. The yields. You got, with all this oil going on and prices going up, and thank God I've had my members in oil, XLE, for a long period of time, and some other oils. With the oil going up due to this war, and the war seems like it's expanding, what's happening is panic is setting in. Normally, people go and they buy bonds, dump stocks, buy bonds, and when they buy bonds, yields go down, dollar goes down, gold goes up, and even the golds aren't going up right now. So what caused this is that the bond holders right now are demanding, because of this war and the fear of inflation and the fear that Powell isn't going to, Powell's not going to do anything. He's not going to raise rates to fight the war. Trump won't let him, to fight inflation from all this oil. So that's where everybody is panicking. But normally when they panic, they can go buy bonds and they feel comfortable. Well, they can't do that right now because these bondholders are saying, we are holding all these bonds right now, and we're not going to buy anymore. We want more interest. Move those yields up for us. We're taking all this risk. That's what's screwing the market up, because everybody who's in the bond market right now, they're saying, we're not going to buy any more bonds. We want you to raise the yields return. We're taking all this risk. That means people that don't have bonds, that want to sell stock and go into the bond market, they can't. Or they're fearful they can, but they're fearful to go in. So that's what's got everything screwed up right now, is these high yields. They're setting a panic. Now, the good news, though, on one side of it, is that at least the banks, the big banks, what they call primary dealers, like J.P. Morgan, Citi, Goldman Sachs, those boys, at least we're not getting, at least they're still lending money to corporations. Like, for example, trucking. They're still lending money to trucking. That's why our trucking stocks follow the money, not fundamentals, follow the money. You can see the institutions were in there buying truck stocks, because our transportation, because you could see that they're still lending to corporations. Now, what am I talking about? when you have, and it's not going to hurt your hair, believe me. I don't even like talking about it, but it's important to find out where we're going. You always measure what is the yield on the 10-year Treasury. And what does the primary dealers like JP Morgan, Citi, Goldman Sachs, Bank of America, Morgan Stanley, when they loan money to corporations like trucking companies, what's the rates? What's the rate between that 10-year Treasury yield and the rate they're charging the truckers? Now, this is important to know because the difference, what they call the spread, is only 80 points. That's under 150. 150 is the red light. 150, you hit 150, start going, you got big problems. But we're still under 150. So the good news right now is that as long as the primary dealers, the biggest banks, are still lending money to corporations, and that's why you follow the money, find out which ones they're lending to, then this thing will settle down, okay? If you start seeing the difference in the 10-year Treasury yield, you can pick it up anywhere on your computer, you can see it, but the 10-year Treasury yield, and just go in and see what the corporate bonds are selling at, where they're charging, and as long as it's below, the spread's below 150, you're okay. So that's the good news. At least they're lending to corporations. Now, the other thing about that is good. They're doing it based on the credit spreads are tight. They're at 80, well under 150. That sends a message that the big boys, the biggest banks in our country, still have confidence enough in the country that they'll still keep lending. Once they shut that off, once you see the credit spreads, follow the money, once you see the credit spreads tightening and start heading towards 150 and above 150, you better know how to sell stock short because you're going to have a hell of a correction or a crash. But we're not there right now. We're not there right now. So right now, at least the biggest banks are still lending. That's good news for the stock market. Okay, even though we're down 1,000 points, then you can get Trump to come in with his plunger team and move it from the 1,000 back down to maybe down 400, right? So, and that's why we always follow the never follow the fundamentals. We always follow the institutional money, and you follow the credit spreads. You always know which way the stock market's going. Okay. Now, another thing, they came out today with, please play the cut. You got to listen to this. Play this cut about the $1,700.
Under Donald Trump and Republicans, in just 1 year, the average American has seen $1,700 increase in take-home pay.
How long have they been spieling that? Like, how long have they been spieling the economy's terrific, right? The economy's terrific. Well, the problem is, it's not terrific, because if it were terrific, with the oil prices going up like they are, then the Federal Reserve could turn around and raise rates and calm everything down. Say, okay, oil's going up. I'm going to raise rates to stop inflation. Then what would happen? Everything would be fine. You see the yields start coming back down. If people were scared, they go buy bonds, right? Gold would start going up. They could go to gold for safety or gold stocks. But that's not what's happening. We got a problem because the economy is not good. And when they play that crap to try to make you believe it is good, think about the $1,700. Know what's that driven by? The tax changes. That's not wage strength. That's the tax changes, for God's sakes. So they got these political proposals and these, in these tax packages, but that is making it look like everybody's getting $1,700 pay increases, or they're saving. They're going to have $1,700 income more this year than they did before, and it's going to $1,700 tax. It's going to help the families. No, and let's say they did. Let's say, okay, let's give them credit for everybody's got $1,700 more. Never mind how they got it. Who cares? You get a check for $1,700? But how many people got a check for $1,700? Nobody did, right? Right. But the problem is the cost of living increases are outpacing wages, for God's sakes. Even even if that was true, you're getting $1,700 more. And never mind how you got it. Let's just say you got it. But rent is up double digits from 2020. Auto insurance is up 20 to 30% in most states. Food prices since 2020 are still up today at 25%. This is what they've got to start tackling, or the Republicans are going to lose midterms, and then we're going to be sitting here listening to those stupid, crazy Democrats. Not all of them. We got some good ones, believe me. The guy from Pennsylvania, he's terrific. What's his name, Willie? Oh, God. Fetterman. He's turned out to be one of the best Democrats we got. He's almost a Republican. But anyways, so the point is that you got rent up, food up, everything's going up. And wages, okay, are really uneven across every income group. And when they say they're spending money, who's spending the money? The top 10%, that's it. That's unhealthy. So they keep telling us how great the economy is, but when oil's going up like it's going up, why the hell they can't when you can't raise rates, when the Fed can't raise rates, to calm it down and say, hey, I'm going to raise rates a full point. We're going to kill this inflation because oil's going up. When they can't do that, you're screwed. But they don't tell you the truth, do they? And even if you got the $1,700, so you got it, I'm wrong. Households are using these wage gains, the $1,700, to service their debt. Credit card balances. I told you yesterday, bankruptcies are up big time. But credit card balances and the delinquency rates are multi-highs. So even if you're taking home $1,700 more, you don't feel it. You're paying higher interest payments. You're trying to catch up on your bills. Your revolving credit balances are killing you. So again, I wish they would stop doing this, because they're going to lose the midterm, and we're going to be sitting there with these crazies. They're going to impeach Trump. That's the whole idea of winning. The Democrats want to win midterms. If they can get control of the House, they're going to impeach him. So what do we do with the stock market? That's what's important. I mean, yesterday, right? All of a sudden, yesterday the market was up. They're talking about, and I told my members this, they said, stop listening to these jibber jabbers. They're telling how yesterday tech was up. Tech finally is leading. But there's no tech opportunity. They're going, NASDAQ was up 1.29%. Wow. S&P had a broad advance, led by semis. All right, let's go look at the semis. Go to the chart here. I'll tell you what I'm talking about. What a bunch of crap this is. Okay, so you go and take a look at the semis. Let me go find them here for you. Okay, so come on. Hurry up, find them. All right, let's see. All right, here we go. So let's look at Marvel. So yesterday was back down today. So Marvel went up yesterday. So what? It's in a severe pricing trend going down, not up. There's no trade there. Let's take a look at NVIDIA. They say, oh, look at NVIDIA, went up yesterday. They're talking, oh, we're turning the corner now. There is no trade there. If you bought NVIDIA yesterday at 182, you're going to get crushed. You're going to get crushed. How are you going to get from 182 to 197? How are you going to get past all those sellers that are sitting there who got trapped by fundamentals instead of watching the money flow, instead of watching the flow from the institutions? So they do this all the time. So they're talking yesterday about, what was the other one they're talking about yesterday? It was doing, Oracle. Oh, Oracle's on its way back up again. This is good. It's up 1.5%. But there's no trade. You can't find a trade. So when you listen to this crap, how everything is up, these people are just, there's no trade there. Gotta look, and even the stocks. Let me tell you, when the yields get this crazy, here's what really happens. It's nothing I told my members this morning we had to be very careful with. We have set up a group that if yields are down, we go long XLY, XLK, XLC, XB. If yields are up, we short them. If yields are up, we go long XLB, XLI, XLE, XLF. And if the yields are down, we short those. But when you get this kind of situation where the bond market, okay, yields are going up and the people that own bonds are saying, no, we're not going to buy any more bonds. You got to give us higher yields. That freezes out all the people who want to buy bonds. So they can't find safety. You can't even find safety going to Coca-Cola. That's why you got to learn how to sell short and learn how to follow the institutional money like we do every day. You got to follow the money, and then you'll always be at least half right. Okay, right now everybody's just getting clobbered when you shouldn't. Learn how to sell short. All right, see you tomorrow.